Yo, good morning, everybody. Hope you guys are doing well. So yeah, we do got news at 7 a.m., which is why we're a little bit later than normal. So we'll see kind of what goes down. Should be pretty interesting. Let's get everything set up. So, did take out that quarterly high like I talked about on Sunday, and we've started a retracement. I would have preferred to see them hold inside this, but as long as we stay above this 50% level from this high to that low, that should be a balanced price range. We do have a little gap in here, but notice what they did, right? It opened up, there was a little gap. They traded down, closed it entirely in, and then they pushed away. So we've got sell side, buy side delivery. So this is just simply an external liquidity raid to now seek internal. And so I'd like to see some type of change in state back to the buy side if we're going to keep going higher. We could even, wait to see if we could take this low out, maybe flirt around with this a little bit longer, shift above this high, creating a bullish breaker. And then that may be what is going to be used to send us back to the buy side. Good morning, everybody. Appreciate y'all hopping on. So yeah, it should be relatively interesting. You see these two pink lines, right? Those are parts of a monthly wick. If we go to the monthly chart, we could kind of see. Is it that one? Oh, it's this big one right here, this big wick. That's what that is. So yeah, DXY is definitely being held. It's kind of been the overall sentiment because of all the stuff going on. It is FOMC week. Okay. We do have a lot of stuff happening tomorrow, which I may actually stick around and do a call with FOMC. Go ahead and show you guys how I navigate that when I do decide to engage. But yeah, so we got the Euro and GBP kind of stuck together. They're not necessarily doing anything spectacular. Still supporting the overall thesis that we were going to continue to drop lower. We do now have this daily bearish order block here. So I'm actually take that off. So we got this wick, we have that wick. We're inside this gap in here. Go to, I think it's on the daily, on the daily chart. So this is healthy, right? If we're going to continue to drop, price opened up, rapidly pulled against the massive decline from last week. And now we're reaching for what? A premium PD array after taking external range liquidity relative to this down movement. We've had up candles respected here, up candles respected here, here. We had SMT at the highs. And prices just continue to decline. Okay. So I think that unless this high is taken, unless this gap gets traded through, unless this fair value gap's given up, unless we invert or retrade back through this weekly fair value gap, and this order block too, right? If that 50% gets violated, those are invalidations. So if it was to get through that, then we could look at things from an inverse nature, and then we would have to adjust. The target was hit pretty quickly last week. And then, of course, because this is a higher time frame liquidity pool, which is the October lows of last year, when it tags it, right, basically you look at it from external raid to internal PD array seeking, right? So external to internal. So if you think about it that way, what PD arrays are above us that price could reach for? Whenever price takes out a low, like a significant high or low on the higher time frame, this is the mindset you want to have. You don't want to think, okay, well, it's broke down, it took the liquidity, so now it's just going to keep rapidly moving. It may do so, but the more likely scenario is they're going to tag that liquidity, trigger in those orders, and then pull price back against, whatever else took place from the previous week. Okay, let me see. Hey, what's up, Wolf? Good afternoon. It's good morning here, but good afternoon to you. Appreciate you hopping on from Germany. It's amazing. So yeah, again, because it's FOMC, we're going to be very light-handed. I called out a move yesterday. I didn't take it, but those in my private group can attest. We did call a move yesterday, but I didn't engage. Even though I called it, I said it was going to do this and that. I'm very strict during FOMC and FP weeks, and as you should be, as we're taught by ICT. It doesn't mean you act fearful, but if it's something that doesn't have enough for you to justify an execution calmly, most of the time it's going to be best to just sit it out. There's always a move, right? Every single live call, there's something that's talked about, right? Literally for the last, year and some change since I've been on YouTube, and the last 3.5, 4 years with my private group, it's every single day there's something. Does it mean we engage everything? No. But there's always something there. There's always something to make sense of. But if it doesn't deeply align with what it is that you do, it's going to be best to be on the side of discipline rather than, I need to hurry up and do this or do that or get to this goal or that goal. The goals will come over time with consistency. It's not 1 or 2 days that's going to catapult you to success. Even if you made 10,000 today, does that change your whole entire life? Maybe it helps, but it's not the end of the road, so you always got to keep that in mind. Okay, so no single event should have an overwhelming amount of importance. Now, when you're trading funded accounts and all that type of stuff, obviously, we want to pass, get withdrawals, so on and so forth. But that doesn't, refute this reality that 1 or 2 or 3 trades, whether they're wins or losses, that they don't have a big impact. Unless you break the rules and overtrade and over leverage, then of course every single moment in the market's going to be very nerve-wracking, because who knows? We don't know if we're going to overtrade for some of us, right? Some of us have horrible habits and self-control early on, and our ambition blinds the reality and the risks. But over time you realize, like, okay, well, if I take a win, great. If I take a loss, I don't care either. Especially in a community like this that has a process like we employ, there's always something that we can make an argument about, okay? Doesn't matter what asset either. So you always got to keep that in mind, because that mindset, the disconnect with that mindset is, and of course, some of the bad habits that traders have, that's why every single moment in price is nerve-wracking a lot of times for many traders, because you don't know, you don't trust yourself, because you've proven through your actions that you are not to be trusted at the moment. So you don't know if you're going to blow your account today. I know for a fact that I'm not blowing my account today, next week, next month. I haven't blown accounts in years. And that's because of the discipline. I have many students that started with me as a mentor. They're with me live all the time. Even students on YouTube who hear me talk like this. They started being with this community. They were blowing accounts before. Now they're not blowing accounts. They may not be exactly where they want to be yet, but it's a gradual process to replace bad habits, build good habits, build the right mindset, and see things for what it really is. It's a gradual process. And depending on how many issues you have, how deep you are in the bad habits, that could determine how fast something occurs or how long it'll take, So, but the bottom line is every day you should be looking to be 1% better. It's very cliche. It's a very common thing in personal development spaces, but it's the truth. We can't look at being a millionaire when we're not even when we've never even made $100, let alone 5-6 figures. It's just the way it is. Many times mentors don't talk about this stuff, doesn't sell courses and all that, but it's too bad. If they really want to help people, they're going to tell them the reality, whether they want to hear it or not. And I'm trying to get you guys to have the right mindset and thrive on your own. And that's not going to come from me telling you always what you want to hear, okay? Or putting you in trades constantly, even though in my process, in the way that I trade, I don't do that. I don't trade every single second, every day. I wait for the perfect moment to strike when everything aligns with what I do and what I teach you guys. And then I attack. And I only have 2 bullets in a day. And if I take a loss on the first one, I'm cutting my risk. Because who cares if you make money? The question is, can you keep the money? Anyone can push a button to make money. It's just the nature of this industry. But at the same time, not many can keep the money that they make. That's why, when they're over trading and over leveraging, things feel impossible. If they're breaking the rules constantly, they're constantly on edge. Because things are just all over the place. They're not doing things as a professional. They're acting as a gambler. And there's no real structured process to develop a trust around. That's why it's also so important to have one model. You want to have one model for at least 6 months. If you want to add more stuff, okay, do it every 6 months. But master certain things, a couple of things in terms of execution every 6 months. Because you got to give yourself time to test if that one thing works. If you're all over the place trying to do 500 things at once, trade breakers and all the different things that ICT teaches all at once, your data that you get is kind of useless because you can't gauge what works and what doesn't work. Some stuff works every now and again and some stuff doesn't. That's too ambiguous. It's too many. It opens up too many doors for certain issues to happen. And it also opens up the opportunity for the issues to slip under the rug and make it so you can't even determine, where the weakness is. So yeah, all this stuff has an impact on success. Again, it's not always what people want to hear because we always think that at the beginning, more trading, more engagement is what should be happening. Otherwise, we're not making progress, and that's just not the case. Being organized, mastering discipline, learning about your weaknesses, what impulses you have that have to be mitigated, risk management, these things are more important, mindset. And again, give yourself time, give yourself grace. Like, think about it. Let's hypothetically say if you were already where you want to be, right? You're already making 6 figures a year, whatever the case may be. And say you have like a nephew or a son or a daughter or just a child or, someone that you're close to that is younger than you, and they come up to you and ask, like, I want to be like you. I want to do what you're doing, and they're asking you to help them. Would we be as vicious as some of us are towards ourselves if we were to teach someone like that how to do this? I don't think so. I think we would have a lot more grace, a lot more calm, like you can do it, a lot more motivational rather than highly overcritical and negative, like we are with ourselves many times early on. So the next time you beat yourself up for overtrading or making a mistake, that's a human error. If you take a look at how much experience you have, and if you have like less than 3 years experience and you're attacking yourself nonstop, I want you to, think twice about that, because, you know, there's a place for criticism, and, there's a place for motivation, and you got to make sure you're placing them in the right, correct sequence, at the correct level, because it's not realistic for someone with 1 year experience to make $10,000 a month. It happens. I have one student that worked with me for the first 6 months of him working with me. He just started thriving. He only had less than 9 months of experience. He now has, I believe, 2.5, and he's crushing it. But that's not a very common thing, because this stuff has a lot that goes into it. And social media will have you thinking that these influencers, who say that you can master it in 90 days and all this crap just to sell a course, you'll quickly realize that they're lying, over time. Maybe it takes you a couple years to realize that, but let me be the voice of reason and tell you that it takes time. Be graceful with yourself, as if you were teaching your child who asked you to help them, because we got to be the best support system for ourselves in this industry. And if we're not, and we're the enemy, again, it just adds on to the reason why every time you sit at the chart and you're trying to take a trade, and you're in the process of developing your trust, it just shows why we don't trust ourselves, and why this is such an impossible task for some of us early on, right? So yeah, this stuff is very important. So keep this stuff in mind, okay? I talk about this stuff, quite a bit, but it's always good to give a reminder. I know I needed it when I was first starting. So yeah, let's take a look at some of this stuff, what's going on. So again, we have a wick in here too. So price trading into this wick, everything is totally fine for it to do so. I mean, it's a massive rate of liquidity up here. And now we're basically dropping pretty aggressively. We do have these relative equal lows here on the DXY. So if we take a look at that, we'll keep that in mind. I got freaking bad allergies. Sorry if you hear me sniffle throughout the call. Yeah, if we take this to the weekly chart, let's take a quick observation. We're trading into this wick here on the S&P. We have the quarterly wick in here, right? This wick right here. Price came down. If you guys remember, we called this gap in here back in February, all the way up until it tapped into it. Wait a minute. One thing we have to do before I do this, I almost forgot. So go to isn't it going? Okay. So the June contract, you can see it's almost overtaking the open interest on the current contract month. Once it overtakes that, it's time to switch contracts. Like you see this here, it's time to switch the S&P. Honestly, I think I'm going to just switch it now. Yeah, it'll probably be done by tomorrow, so I'll just switch it now. Okay. And why is it important to have the actual contract month? Well, it's because if you don't, like for example, the continuous contract on the Nasdaq, it doesn't show that we tagged that fair value gap that we're inside of right now. you can imagine that that's a problem, because whether something is tagged or not is significant. So if you're watching an asset like the continuous contract and the actual contract month actually hit a level while the other one didn't, it's going to throw off your anticipation for what's going to potentially happen. So it's very important. Okay. So if you haven't done this already, I highly advise you to do so. We're still ahead of the open. We still have news at 7 a.m., so we're not missing anything. I don't care what price does right now, if I'm being honest. Does look like it's going to tag this buy side up here. So that may be something reasonable. Yeah, let's come over here. And yeah, we got enough data that it's not really spotty. So there's enough liquidity in this to assume that it's time to switch. Like, for example, just to drive this point home, I know some people use a continuous contract, but if you see this gap here, if we go to the Nasdaq continuous contract, we haven't tagged it. I mean, you can imagine if you've been in the ICT world for a while, that's a significant issue. Okay, so it's just not worth even having to deal with it. All right, so even this next contract month, the June contract, which is the second quarter, even this contract tagged it. But so I don't really understand why that discrepancy happens with the continuous contract, but it is a fact. So just something to think about. At least when you're executing, you can do analysis obviously with the continuous because it has more data. That's what I do if we're like having huge ranges that break out of the liquidity from the last quarter, and because some of the stuff's cut off. So if you're down in levels like this, you do want to kind of take a look at what's taking place with the continuous contract to get other potential scenarios and draws on liquidity that can make sense relative to the chart. But when it comes to execution, right, remember, you want to be on the right contract month because the liquidity is moving. It's changing hands from one to the other. So there may be pretty heavy discrepancies once you are ahead of the previous contract month. So yeah. So that's how you check to see what contract month we're in when the quarter actually changes. You use bar chart in the way that I just described. Okay. I use a continuous contract for these though. It's not really a necessity, honestly, for the bonds and yields. You can use a current contract for the currencies as well, but I think the continuous is fine. We just use it for analysis. So yeah, just to make it really, really quick here, as far as what we're looking for, we have the wick in here. It's trading down into the wick. We want to see how that's respected or not, right? Is it going to set the low the week and then rally? Getting us beyond this bearish order block, maybe inverting this again. This is, where's it at? That's a 16-hour fair value gap. Okay, let's actually go to the 4-hour. Look at some of this. I think that's a 4-hour. Yeah, we got a 4-hour suspension block in here. See how it was respected? We got this large wick in here too. You see how the body's closed below that? We got one change in state, right, with this decline here on the 8-hour change in state. And then we have a secondary change in state here. Once that happens, it's more than likely that it's going to keep digging But because of the higher time frame framework, this all may be just in the context of a retracement to then maybe continue to go higher, especially if we can get the yields to continue, right? If the yields just end up, really smashing lower and we end up just eating up all of this and fail to get up above these highs or even attempt, the dollar is going to most of the time follow that. And then obviously the indices do the opposite and the foreign currencies do the opposite too. And if that happens, you also want to see the bonds here. You want to see these do the opposite of the yields. So if the yields decline aggressively, which should drag dollar lower, we should see the bonds rally, which again would send the indices and foreign currencies through to the buy side, or at least give them the interest to do so, because that's just how the intermarket relationships operate. That's the impact that the bonds and yields have. That's why we always start Sunday with this asset, doing a deep dive on it like we did this week and every other week. And then, of course, we glance at it throughout the week just to see if there's anything that changes based on the analysis. But yeah, it's one of the most powerful ways to build confluence for a narrative. It's also a way to gauge whether we're in a trending environment or not. Or, if we're going to eventually maybe kick into a trending environment, like say the indices are consolidated and the dollar, but the bonds and yields are rapidly delivering. That kind of gives you insight as far as what could potentially happen moving forward out of the consolidation. And of course, you also want to use what the scenario is on your asset of choice. Any of the indices, the currencies, right? Whatever's happening in the chart, coupled with what the bonds and yields are showing us. Again, it's like a crystal ball many times, especially in a consolidated environment. It gives you what the odds are for either direction to be targeted. Like if it's consolidated, but the bonds are declining, right? Use the indices for an example. If the indices are going sideways, maybe we're going into a bearish seasonal influence, and we're seeing that the bonds are rapidly declining aggressively, it's more likely that the big move is going to extend through to the sell side, especially if you can make an argument with like bullish DXY at the same time. And maybe there's an equal low or something that could be targeted on the indices. It's just, one of those little quirky things that ICT's taught over the years that is highly effective. And you see that on display with what we do, right? What we've been doing for years, both privately and now publicly with the analysis, okay? So again, this is something you see over time. It's not something that I could just say and then you trust it right away. You got to see the relationships take place. And then, over time it becomes, pretty apparent that this stuff's important. Obviously, there's times when there's cracks in correlation, just like there is with every asset. But in those times, what the condition is. It's lower probability because the first key signal for high probability trading, which is intermarket relationships, is out of line. So with that information, you're able to then calibrate your risk properly and cut your risk. This is how I personally use the bonds and yields to really assist me in clarity. Okay. Let me make the changes here. Make sure everything is correct. Okay. So yeah, these equal highs are pretty obvious, obviously. We also got the bonds kind of racing to the buy side. We have a new week opening gap high up here. We got trendline liquidity in here. Price looks pretty reluctant in here to continue, right? We did dig pretty deep into this wick, but it's still closed above the 50%. So, that's pretty telling, especially with the change in state of delivery. We got stop raid, attempt to break down, failure to break down, back to a change in state of delivery. So if we do get above this, we could rest assured that we are probably not going to go lower anymore, because we'll have a stop rate that led to a wick being respected, and then a change in state of delivery, and then new week opening gaps are being traded through as well. So what level is that on? Oh, whoops. That explains it. I'm in the wrong asset. So yeah, it looks like the Nasdaq is on its way up there. We got this stop rate in here. Got a breaker, drag that over. Price came back down into this fair value gap. This is a bullish order block. It's respected that, change state of delivery. I'm sure it probably was a 2022 model overnight in here. We do got the dollar racing pretty aggressively. So until we can get back in line with changes in state after stop raids here, we do got to keep in mind that this high to that low, although there's these equal lows down here, I think there's S&P down there, if I'm not mistaken. Let me actually fix this crap. Take a look at this. Oh, whoops. Just flipping through the continuous. So I'm very curious to see what happens with this fair value gap. Because if it respects this fair value gap, say it hits that, maybe takes the highs one more time, it may offer a 3 drives pattern here from this daily perspective. Like 1, 2, and then a third. So this is the line in the sand. You know, we're still inside of a range-bound environment, so you got to be flexible. If it stays in this environment like this, you got to use previous hourly highs and lows. We do have the previous week's high up here, which we have relative equal highs above. Then, of course, we have the low down here. So if we wanted to get premium and discount, we could take it from that low to that high extreme. We got equilibrium in here. Whenever we're at a large equilibrium price level and it is being held in there, the reason it's being held is because that's what happens at equilibrium. They accumulate for either buys or sells, doesn't matter. So a lot of times this can hang around, and if we were to stay in this level like it was for the last couple of days, until it breaks out of it, you got to expect that we may continue to bang around in there. We do have this low to that high. If this was going to continue to decline like we were assuming, we would have stayed below the 50% level, right, from this high to that low, basically in this area. But instead, price came down, tagged some of this liquidity here, deliberately swept these people out that got started with their buys down there. Now we're back above equilibrium. So now what we want to do, we want to take this high to that low, get that 50%. If it continues to go through this, say we break this high, I'll look at this as a potential buy model to then seek the equal highs up there. And that's what we'll stick to. And then we'll just assume that it's going to go back inside this overall consolidation in here. It's having a real hard time, as you guys can tell from the last couple of weeks. It's been very jerky back and forth, attempting to break out, and then it doesn't, takes stops, and then comes back to equilibrium. So it's a pretty testy environment. We have FOMC this week on top of that. So, don't, like I said, be too hard on yourself. Give yourself grace this week. And if you're going to trade this type of environment, just know that you should be scalping. I don't encourage you to take anything, right? It's up to you. You make that decision. I'm not a financial advisor. But if you do something in terms of engagement, the best mindset is to be very, conservative, aim for very low hanging fruit like this high, some of these highs like we mentioned earlier, even this high, if it looks like it wants to get up there. Looks like that may be the case. The way that I'm going to be able to get back in line with trustworthy interest for shorts is if we could reject this level, which is my line in the sand. Okay, line in the sand for sells. Okay. And we got this new week opening gap in here. Definitely want to keep tabs on that. I don't think I like that. So we got 6:30 in about 4 minutes. The hell is, oh, there it is. That is March 1st. Okay, and then we got this one here. We have lots of new day opening gaps. So as price trades through, we do want to make sure that we're observing these dynamic levels of support. If it's going to keep going higher, it's going to smash through them, use them as support, maybe even extra entry opportunities in many cases, assuming that we're correct if it does want to go up. And it'll just help support us, if we do find something to engage. Something that you do want to keep tabs on here too. We are approaching the gap in there. So let me go back to the time frame it's on. It's our daily. So that's that daily FVG. So again, with that being the case, we are seeing some early signs that it may shift and try to go higher. We have the wick in here being respected. That's one. This is after a stop rate too on the higher time frame. We have a secondary thing being this wick here and this order block being traded into like this, being respected. That is a second sign. The new week opening gap in here is also acting as support. That's this one right here. And then now the last line in the sand for 3 PD arrays is going to be this here. None of this should be holding to go higher if it's bearish. It should be very lightly, reacting just to set up short-term premiums to then go lower. So we're in the last line of defense here. Because once this is violated, my mindset immediately goes to these equal highs being a market maker buy model scenario. We were in a potential sell side market maker sell model, but that has now failed to deliver that second stage distribution to then go rapidly through this low if it was going to be exceedingly bearish. Okay, so because that has kind of faltered a little bit, we have one last attempt to continue to trust the shorts. Otherwise, once it breaks through this, if it trades into that and then uses it as an inversion, essentially, again, that'll be the crux of us targeting the buy side, or the centerpiece of what we're going to use to frame the context of price going to these equal highs. And that may be something that happens in a day, maybe the next couple days. We do have the low of the week here currently. So we've immediately started racing towards all of these highs and this liquidity up here, we are also inside of a range like I described to you guys. So we're leaving equilibrium now, so that's a good thing. But we're just going to have to wait and see. We're going to let price do what it does for the first 30 minutes. We have news at 7 a.m. So anything that's before the 6:30 time could be manipulation. So we got to keep that in mind. That's why I'm not really interested in doing anything until I see how this is going to be treated. You know, could there potentially been an argument once price took this high out, right, for this to be a market maker buy model, to just simply set up a run to this premium PD array to then try to decline after it does that? You could have framed a move like that, counter trend to the downside, right? You could have traded a buy up there. If your model's in place, you know, it is a possibility. We do have this previous regular trading hours gap here. So we're above that. Now we got a little regular trading hours gap. I'm not sure why it's not populating on my chart right now. There it is. Actually remove that. Why is it not populating? See, I'm not concerned about missing anything. You shouldn't be either, right? Doesn't matter if we take a trade right now or at the last macro, we'll be able to find something to talk about. So be patient, you know, calm your nerves. You know, price has kind of opened up pretty aggressive, but we now have a little bit more information. So this regular trading hours gap is a widely available lower gap. We're opening up at a premium. We also have the gap down here that has not been fully justified if we were to continue to drop. Say it takes the high up here. Remember, this is the last line in the sand. I do think we'll get up there, take these highs. This is early sellers from yesterday. So it's the PM session high. That's what the target is. We did retrace back down into this. It's respecting the regular trading hours gap. We're in a range, so you can't be too overwhelmingly heavy-handed. And it could simply, very easily just be racing up here to tag this high, trigger that liquidity in, and then rapidly look to go lower. I would prefer to see that happen, but we're just going to have to wait and see what the first 30 minutes turns into. See what it chooses to respect. It looks like the S&P is on a rampage, huh? Very solid recovery for the S&P here. Got relative equal highs up there. Remember, I mapped that out earlier as a possibility. It's definitely gotten up towards the buy side in a quicker way than I thought. I didn't think it was unreasonable for them to want to come up here because, again, what we outlined earlier, prices were tracing. This is a failure swing in here. So if this failure swing turns into inverted PD arrays, disrespected bearish order block, and then continued buy side delivery towards the high up here, then of course we're going to have to put the shorts to the side for a little while and then look to try to target something like this failure swing up here, which it wouldn't be unreasonable if they take out this fair value gap, say it trades through that. We already have a stop run. We already have a change in state of delivery above this order block. We got proof of respect to that level as well. And then if it gets above this daily fair value gap, that's an inversion. So we have multiple things on our side supporting a move that could potentially target these highs up here. Okay, so that's rapid. It's really rapid. So let's see what the behavior is as we approach the first macro, because that's when I will look to try to make some type of decision if I do choose to do so. If we go to the 15-minute, Remember, we have this range here that we've graded basically. I'm gonna turn that into a different markup. So I'm gonna look at this from the lens of a graded price swing. Okay, so again, the deeper we go, especially if it breaks this high up here, which, you know, there's still some of the gap. If you go to the regular trading hours, you could see what it's reaching for, right? There's a gap in there that was not traded to earlier in the week. But we also have one now to the downside too. So if it runs up and tags that and then gives us an aggressive run from this fair value gap, you know, we still have reasonable expectation that it could go down there once it shows that it wants to do that again. Right now, you know, shorts are not really on the table. So there's no reason to fight price, right? It's continuing to go higher here. So again, we're taking out previous day high here. So that's a nice sweep of that. We got failure swings down here. We did have a stop run here. So this high also, if it is bullish, say we do get above this, this high here to the low may very well set us up with, actually, I'm gonna let you guys say what it is. What is this high to that low? Once we break above this here, well, we kind of have already. So what is this high to that low? And then this higher high, you know, what is that creating in there? See if you guys know. Okay, Maddie said BPR. Okay, what BPR specifically? Yeah, exactly, Joan. A breaker. Remember, breakers and order blocks, once they get confirmed, are leaving behind balanced price ranges. So that's why they should be respected. And when they're not respected, that's why you have to invert. And they could be used in an inverse nature, and it'll create a balanced price range going the other way. So you can easily, over time, when you get comfortable with this perspective, adjust. So if you miss one setup, say it fails, you know, eventually you may end up having the comfort in switching if there's a lot of evidence that price is not going to do your initial idea. You know, and even if you don't do the flip-flop, right, and immediately switch, you're still going to be able to, you know, make an argument potentially for the other side potentially. So yeah, it just helps you be comfortable and not be so married to one thing, and how you can go about having flexibility in your trading. So you're not going to, you know, eventually care if you take a loss or if you get something wrong, because you know how to flip the other way, because everything has an inverse nature to it. Like if an order block fails, look at it from an inverse perspective. Keep the same levels, but think about it from an inverse nature. Same thing with the breaker. Like if this does not hold here, if we can get a return into that, I'd like to see it hold if we're going to go higher. But if it wasn't able to hold there, we would very easily be able to wait for a price to break outside of it and then return into it as a inverted breaker. Maybe there's also another, you know, with the trend breaker that forms, right? Maybe there's a bearish breaker that forms after this bullish one fails. You can use both of those points of reference to then try to navigate and find an opportunity. You know, you don't want to flip-flop immediately, because that's a bad habit you can develop, and it could become a real serious problem. So, but over time, you'll discover, especially being in this community, there's ways to do things and not be so concerned about getting things incorrect. You can always get back in line with whatever is happening. So yeah, that being said, okay, we've got lots of points of reference in here. Got this new day opening gap in there. It's pretty solidly traded through. We have this high up here to that low. We broke above that. That in itself should be a balanced price range. But then again, we have the parent range, which is this here. We got stop run here, stop run here. So the new range of opportunity was from this low to that high, and it traded down to a discount relative to that. And now we got sell side taken here, buy side taken here. So now our new range of opportunity, as price creates new premium and discount, our new range of opportunity would be in here as well. So discount relative to this range would be down here. Because this high to that low has had this displacement through it, it's unrealistic to think that if this is bullish, it's going to come down to here. You know, we're also inside of a potential market maker buy model, assuming that at some point we get out of this range today. You know, we may bang around in this range because it's ahead of FOMC. There's no getting around that. The only way you can get around that is, again, look for low-hanging fruit objectives and don't expect the extreme to be taken. If it gets there, great, but you don't need this to be taken to find an opportunity or this to be taken to find an opportunity. We have these lows. We have this high. Okay. So, you know, assuming that, you know, price does keep going higher, you know, you could frame something just simply targeting this. All you need is 20 to 30 points. You don't need more than that. You know, the bigger moves come from the higher time frame framework, like a daily order block being traded away from, or being traded to, a daily breaker being traded away from or traded to. You know, if you could frame things around levels like that or significant lows like this, the range of opportunity becomes much larger than something on the 1 minute chart that like originated from the 1 minute. You know, you want to have a larger time frame framework to couple with whatever execution you're doing at a particular time, like macros, which we're approaching the first one that I like to mess with. So we'll keep tabs on that. I'm not gonna draw on this too much. You go see where, there it is. Okay. Okay, so again, I actually have a suspension block here. I think this has to do with the, yeah, it's a suspension block there. I think the discrepancy here has to do with the settlement. Huh? Kind of it shows it on both, actually. See a little change in there? So yeah, that in itself is a PD array of interest. And you got the quadrants inside that. It's just something good to have as a reference. So we're getting up to the upper 25%. Okay, and it's also this new week opening gap's 75% level. Again, I'm thinking more so at the moment, unless we get a rejection here, I'm thinking more so market maker buy model. There's that little gap in there, like I said. So yeah, I think I'm gonna try to, within this macro, see if we can't get price to, stay above this high to that low. If it breaks through the midpoint of this high here to that low, if it gets too aggressive trading into that, I may, still wait and hold my fire real quick. Because once we take this high out, we're now officially in second stage distribution territory, and we may get a very rapid rise through to the buy side up here. So So I'm definitely going to keep tabs on that. Let me actually move this a little bit. So I want to keep this reference on the lower left-hand side of the screen. We have DXY there, so we can always keep tabs on it. And again, this is where we're at. So I definitely want to see if we can hold this. If we're going to be bullish, it will, right? We already delivered a market maker buy model here. Anytime a market maker model is delivered, that could be classified as a previous balanced price range. I mean, you can imagine, right? If it's got sell side that delivers buy side, it's balancing the price range once it takes the high, because now we got sell side and buy side delivered to completion. So if price tries to trade back into that, it shouldn't go beyond that previous market maker model's 50% level. Like say it gets up here. If it trades into this one more time, it should not breach the 50% of the previous market maker model. It's one of the rules that isn't talked about a lot, if at all. I don't think I've ever heard anybody on YouTube who trades market maker models mention this. But that's one of the, quirky things, characteristics that's specific to the market maker models. They are presenting you with another form of a balanced price range as well. So yeah, and again, if that was to trade through this and it never comes back to the midpoint, what's your narrative? Especially if the higher time frame supports, say, bullishness, your narrative will be bullish. And you now have guardrails, areas in price that it shouldn't trade to if it's going to continue to make sense and keep going through to the buy side, for example. All right, so yeah, this thing is on an absolute tear. I didn't think today was going to be super exciting because, of course, it's pre-FOMC. Many times they like to wait, but then again, we're inside consolidation, so it's not necessarily too crazy for them to want to bang around aggressively, because they're already in a big holding pattern that's got massive liquidity above and below. So anything inside, right, the interior PD arrays and liquidity pools, it's all just, areas to build sentiment, tag liquidity, uses counterparty, engineer sentiment, right, so on and so forth. But again, I'm looking for this high to be targeted here. There's nothing to think about in terms of shorts. I have not mentioned shorts once. I said that I would like to see a breakdown if it's going to go lower. But now we've broken this high, created a bullish breaker. Okay. So yeah, we got that breaker there. So as long as this area does not get traded through, we also have the new week opening gap from the 1st of March. So that should be dynamic support levels, right? We got this high to that low, creating the breaker. We got this high to that low, creating an order block, balanced price range. Everything is balanced in here. It should not have to come back down there, unless it wants to, revisit the sell side. But we have things that have led to a change in state. We're now violating this level that I talked about earlier. So, nothing at the moment is telling us short. So it's all seeking buy side. Question is your model in place? Maybe it was in here. Right, there was a return right there. It's kind of outside the macro. We're just now getting into the macro. So things happened very quickly before the macros could take place. I have very rigid rules about when I trade. I want to be at least 5 minutes before or after or inside the macro. Preferably the first after the 6:30 time. Let's get that first 30 minutes, see what the sentiment is, where price is headed. It's very clearly reaching for this buy side here. So that's what my assumption will be. And then we'll see how this is treated, because when price trades through this, that's an accumulation phase on the left side of the curve if this is a buy model. So once it trades through that high, I have a guardrail in place it would have to be this low as invalidation. So it would have to stay above this in order for me to keep looking for buys. But until that was violated, I would still continue to keep seeking buy side delivery because of just the principles of the market maker model. The accumulation phases on the left side, once it breaks through them, that was a previous balanced price range, right? Sell side, buy side, sell side again. You could see how it was treated as an order block, aka a balanced price range. And so once that starts to get violated, we now have previous areas of price where a balanced price range was present, now getting violated and turned to an inversion. If that's the case, the low should not be traded through once it breaks the upper portion, creating the inversion nature or inverse nature in the market maker buy model distribution side. Okay, I hope that makes sense. A little bit more advanced topics about market maker models, but hopefully I was able to land the plane on that. Very important stuff. But this is what I'm basically going to use here for the narrative this morning. We definitely wanted to wait, given the fact that there's news coming in 10 minutes. I think I'm going to elect to wait to make any decisions, up to that point, because you never know, right? When a news event comes out and we've traded so aggressively at the beginning of the open, prior to the open, and then through the first 30 minutes, manipulation a lot of times can also bleed into that first hour. Many times there's decisions that are being made though about the daily range within that first half an hour. A lot of times the high and the low, or the high or the low, depending on what direction it's going, can be set for the indices specifically within that first 30 minutes, especially if London was slow. So, these are some reasons why it's best to wait, why you should wait, and why waiting does not take away opportunity. It gives you more context, and maybe you do miss some setups early on. There's nothing wrong with that, because if you know what you're doing, you're able to find moves all day long. I could find a setup in reality every hour if I wanted to, be like a micro scalper, because every hour has an hourly candle. Every hourly candle is operating in the form of power of 3. So from the hour-long time horizon, if you break that down into 4 pieces, you could then separate accumulation, manipulation, distribution, and then the opposing end of that hourly candle. Same thing we do on the weekly chart, the daily chart, 4-hour chart. It's the same stuff across the board. So yeah, it looks like we've had accumulation, manipulation, distribution. We have the rebalance, and now we're in redistribution, targeting the high up here. We also have, again, the market maker buy model. We have consolidation, accumulation, reaccumulation in here. Or, this is pretty much the smart money reversal. So we just have the one accumulation on the left side. So once it breaches that, we should have, just like it did on the other side here, we should have one retracement that begins, maybe take stops real quick. Maybe this itself turns into that. We're not quite above that yet. So again, I'm probably going to end up waiting. But once it does that, if we can get retracement and then a change in state from like the 5-minute or 15-minute, that's enough for me to look for an entry or consider taking something. So before this even unfolds, before this news event comes out, and we can get that information, this is what I'm thinking ahead of time, right? This is what I'm considering, just so we're all on the same page, right? Again, hopefully all this stuff has made sense so far. Let me know in the chat if you guys have gotten value and if it's made sense. Again, I'm here to answer any questions, whatever the case may be. So we'll see what goes down here. Okay, Fritz said, okay, no questions. If at any time when I'm explaining something, you guys have a question, let me know. If it requires a deep explanation, obviously I'll wait, especially if we're about to make a decision. But I will make sure that I get to your guys' questions. That's pretty much the main function of these calls is to answer questions, show, under the hood, how I do what I do. I think it's pretty good. Lots of students that are succeeding with this way of trading as well. So yeah, there's really no doubt whether this stuff's effective or not. But so yeah, if you guys have any questions, let me know. Even if you guys have a little bit of differences in how you do analysis, I'd be curious to hear that first and foremost. But I'm sure that if you're in the ICT world, everything that I do is from a pure ICT perspective. I don't use any external stuff. I don't care about anyone's supply and demand. I don't care about their whatever else that they like to merge with ICT's concepts. I use his concepts purely. So you can rest assured that anything that I talk about, it's pure. It's not me renaming things. I'm not creating my own logic. I have created my own models with the components that ICT has gifted us with, which he tells us that we have the ability to do that. So I went ahead and took him up on that. I made 2 models that I teach my private group students. But, even that is pure. It uses certain scenario, uses PD arrays, a couple of them together at a specific time, at a specific place and price. And yeah, it's still purely ICT's concepts, just not a specific tactic or sequence that he has talked about in great detail specifically. He's mentioned the components, but he's made us put things together in many ways. So yeah, if we move this chart around a little bit, we do have a bullish order block here. Go to the 16 hour, we have a potential propulsion block, which is an order block that has an order block inside of it. So this is potentially going to be a very sensitive high here. Okay, I'm going to actually move this over a little bit. Okay. So yeah, all of this, again, from that range I talked about, this high to that low, 50%, we should not come down into that if it's going to be bullish. If we're going to say target this, hopefully we leave this high available, going into this news event. Hopefully it opens up, drops lower, tags this once more, and then we see sensitivity, pretty aggressive sensitivity, because it's also a bullish breaker. If not, and say we break down below that range in here, I have outlined as the breaker. If it breaks down below that, we know for certain that we're going to target these equal lows. And then, of course, that would set up a bearish breaker we could then use to adjust and then target the shorts. So in consolidation, you have to be able to understand that being flexible is critical. You can't be heavy-handed every single time in consolidation, unless you're looking for short-term targets, very, very close targets. Then there could kind of be an argument, but even then, you still want to be able to have a light-handed hold on the narrative. So then if price does present you with new information, you're able to then make adjustments. So at least for the moment, right, I would like to see, we got early south side liquidity here. That's also inside of, like I said, this specific area here. So yeah, we got 60 seconds. It's a propulsion block. We also have small gap in there. I think it's better to take it to the 5-minute, get a bigger PD array. It's got more weight to it. See how high we can go. So yeah, the upper portion in here, I'd ideally want to see just a small slight tap into that. Maybe it comes down, taps the propulsion block high here. We definitely do not want to see the midpoint get targeted. If it just starts smashing, then of course we have the gap in here. Then we also have equal lows, and then the remainder of this gap down here as well that may get targeted. And then the buy model may have just been triggered in for manipulation to target buy side, to then create a market maker sell model to target the sell side in here, equal lows. That would be supported if this is going to go lower, right? And it does say reject this high up here. We've already taken this. If this level in here rejects aggressively from here, we have a bearish order block, right? And then that could also end up becoming the potential foundation to a short if this does give it up and does not react sensitively to this low. Again, we're inside of a range. I'd be a lot more confident for this to target a larger buy-side liquidity pool target once we take this out, because then we can fully confirm the market maker buy model. Otherwise, if it fails in here, say it breaks down, then of course we could potentially paint out a market maker sell model. Regardless of what happens, we're ready for either scenario. But this is a very aggressive run. So for now, I'm going to look to see if we can anticipate price holding here to then try to get us up through to the buy side. We got relative equal highs here. See, the bodies are super equal. It's like a variation. Well, maybe not so much a variation. It is a rejection block, right? That's what this is. We got a higher high right here, lower high to the left, and we got equal bodies. In the purest sense, that creates what ICT calls a rejection block over and over. So when price trades into that, if it wicks it and then the bodies close below it rather than above it, and then we start to see, price decline, you could rest assured that that's a rejection block being respected. Otherwise, if it trades through it aggressively, it's being disrespected. So that's a bearish PD array that's being violated if you had the bearish overall perspective. Okay, so you'd have to, be flexible. So yeah, we got the 15-minute in here. Let's see. So again, we got this 1 hour wick. Let's see, what's the highest time frame we can map that wick on? See, I wouldn't be surprised if we get this rejection here, at least slightly. Okay, so now we drop down. So yeah, we're watching these levels to see how it's going to react here. We got relative equal lows down here. So if this gets beyond the 50% of this low down here to the high, if it trades through that 50%, I immediately look to adjust and try to target the trend line liquidity in here. And then again, all of this will have proven to be manipulation. We want to watch how this is going to be reacting here. Are we going to just simply have taken the highs up here, failed to break this high, failed to fully confirm the market maker buy model? So it turns into a failed buy model that then looks to transition to a sell model targeting these areas down here. That could very well be the case. So we got to see what the reaction is going to be here with this news event. So far, it's just basically took buy side reacting from this opposing PD array. If this was going higher, that's an opposing PD array, the bearish order block. So now what's important is to see the response here from this propulsion block that I outlined earlier. So I'm very curious to see if we go to the 5-minute. This is a bearish order block. So I want to see if it breaks down into this level here, if it trades back up into this order block, how is it going to behave? Is it going to wick and then close well below it? Basically, offering response from this area here with a lack of response from the propulsion block, discount sensitivity? Or is it going to be sensitive to this, tag it, create a change in state to the buy side, in which case I would then look to try to take a buy? But again, I'm more on the side of let's continue to wait a little bit. We've had a very rapid move. You can imagine that everybody and their mama is trying to find a buy right now. Everybody probably thinks they're missing something, in this consolidation. It's the whole point, right? To build up sentiment, to jerk you around. Okay, so again, we got the midpoint here of this order block. So again, if this order block is going to give it up, this should act as a dynamic inverted level of support. We want sensitivity. If it's going to continue this behavior, it should be sensitive to any discount array. We should get almost immediate feedback, especially when we're in a macro. But again, we basically started off rapidly racing to the buy side. We're back inside this nasty high resistance range in here. So I'm very curious to see how we're going to treat this and this. Because whichever one proves to take precedent over the other, I'm going to trade in that direction. And again, my full-on line in the sand is going to be the 50% level down here. This low to that high. Is that it? Yeah, right there. So let's see how this is treated here. Because if this breaks down below this, shoots a wick into this order block, and then displaces, the likelihood of the 50% of the current regular trading hours gap, there's a 70% chance that it'll reach into it. That would put us in probably the high 80s, 90% chance. And then we'll be able to see these equal lows get tagged and everything like that. Yeah, it's going to be very significant how they treat this here. You can notice how we're above the open price. So we had accumulation, manipulation below, and it's just been rapid distribution from overnight. So technically a very fast London session. You guys know, if you've been here for a while, a very fast previous session or previous day. Going into New York session, a lot of times price pulls against them. That scenario, given the stop rate up here, if it does look to retrace, it supports the fast London expectation of a slow New York session as a result manifesting. So yeah, we'll see what happens in here. Again, like I said, this level here, that's the midpoint of that higher time frame order block there, which is also the accumulation if this does get up above this high for the market maker buy model. So it should, if it's going to be bullish, not break out below this level in here. Okay, we should be able to respect that. So I think that's that wick right there. So again, hopefully you guys have gotten value so far. So I want to see the reaction here. If this low gets taken out too, not only is that a bearish order block on that 5 minute, but we also have the down movement, up movement, down movement. So this candle here, that range, you drag that over, and if it respects that and starts to push, you know that it's potentially going to try to target this gap in here. So I think it's becoming more and more, more and more of a likelihood that we are going to get this retracement. We're having a lack of real sensitivity to basically retrace, tag this level, and then immediately run. We want instant feedback off of something like this if we're going to try to continue to catch the continuation. Otherwise, we have to wait, right? It may drag down a little bit. It may look to, like I said, break this low. If it treats that as resistance, maybe even inverts this level, a simple retracement back into that. It's also at the high of the new week opening gap too from earlier. That could lead us to then just simply targeting this in here. Very small, short-term target, but very logical. And then whatever happens once it reaches that, obviously we'd be able to, do whatever we would have to at that time. But again, the deeper it gets into this, right, say it breaks down below this blue line like I showed earlier, that is for surely a bearish move trying to target this, and we could just simply catch a second stage distribution down there. But yeah, you don't always have to catch the very first move. You could wait, especially if you like the market maker models like I do. Many times it's best to wait for the second stage, especially in a consolidation. Let it prove it to you. Okay, so this displacement here below this low, the only way I would even look to consider thinking about a buy is if we can now take this high out, giving us that change in state, maybe an inversion, respect to the propulsion block. Otherwise, say it breaks down through this level, comes back in, like with a wick or just a couple of candles, and then breaks down, right, against like something like this, but over here, again, that is showing us change in state of delivery. We had one here from the 5 minute, so we got a 5 minute change in state for a short-term retracement. So if we get another pullback up to the buy side that then displaces through that again, we have multiple changes in state, both from the 5 minute all the way down to this 1 minute, with a very logical target being the inefficient price delivery down here that has a 70% chance of being targeted generally. Okay, and we took buy side already. It's still kind of in a range, so pulling back into what was already done makes sense. We had a fast London session, so the likelihood of a short taking place, it's not out of the realm of possibility. Okay. Again, more and more, it's looking like that's going to be what the main idea is, this gap in here. So let's see how this low is treated. If it runs into that and we get an immediate pushback to the downside from here, and we continue to have no reaction to this level, until we get that reaction, this becomes the main focus. And again, you got to ask yourself, is your model in this? Is this something that you're comfortable with in terms of navigation? Is this something you're comfortable with in terms of risk? Is your model there, right? If you answer no, then you're just tape reading, and there's nothing wrong with that. Okay, but I like this in here. If it can hold that, that'd be nice. And again, just simply looking for this gap to try to get tested. I don't think that's too unreasonable. I think it's actually highly likely, in all honesty. That's assuming that this reaction from this doesn't happen, at least for now, because it could still pull back down into that and then immediately start to run again back to the buy side, especially if dollar continues this weakness. So you have very strong retracement into this. So it's going to be very important that this gets left open, with this retracement. We want most of this to be left open, and that's totally fine, right? 2,500, that's where the gap is right there. So it could still leave most of this gap open while still having an opportunity to target the gap before it turns. Yeah, see right there? That opportunity there that I just pointed to? It's moving towards the target. That right there already offered 40 points. So yeah, there was the first opportunity I pointed your guys' attention to. Again, just because I say something, though, doesn't mean that, oh, it should be something you consider. You should always think, okay, well, does it align with what I believe is going to happen? If it doesn't, and you just follow something that I point to, you're not learning. You're a signal junkie. It's like a drug addict. I'm giving you a fix every time I call the market. I mean, it does help, in some ways, if you use it, use this type of stuff responsibly. Sounds like a drug, right? But if you're reckless, over trading, over leveraging, taking things that make no sense to you, and no questions are asked, it could be a problem. So yeah, that was a decent run right there. So again, I think that we will be able to tag this in some form or fashion. Not sure if it'll totally overtake it. If it totally overtakes it, my objective is going to be these lows for the remainder of the day. Like if we get down below it. So look, we came all the way to the 50% of the previous gap. I'm surprised that it didn't fill it all the way in. But this is the nature of consolidation, right? It does half measures, then it comes back later. It's just the nature of consolidation. But yeah, that little move in there, targeting 20 to 30 points, looks very small, but 20 to 30 points is scalable. And it's something we're able to do every single day. So, 20 to 30 contracts with 5 contracts on, or even one mini, you could imagine it's pretty impressive. So yeah, again, this should act as resistance. We should target this level. I think I'm going to actually move this. It looks like it's pretty likely that we're going to target that. We are trading into this down movement, up movement, potential balanced price range. But again, this gap here is inefficient inside that range. So it's reaching towards that like a magnet. So yeah, everything that I walked you guys into when I mentioned the 5-minute change in state of delivery, said that if it breaks this, it should act as a bearish breaker. Seems like it did, doesn't it? So if you trade breakers, this is a type of scenario. We have a low, high, lower low, and price returned back into what? The low. Did it even attempt to get deeper, at least for this move? No. All right, very, very short term in nature. Obviously, it's a 1-minute chart, but we're in consolidation. It's the way it is. But has it unfolded in a way that I assumed it could? Right? Did it break certain levels that I said, if they get broken, would potentially send price to a particular level? It did. It broke down below this. It created a 5-minute change in state, came back in, retraced, touched it, and then ran right to the high of this particular gap down there. So again, only way that I would be looking to buy, we are now pretty solidly trading into this propulsion block now. So we will see, right, if it can now give us an immediate strong response. Because if it does, we still have, the equal highs up here that could be part of the equation, just coming off this retracement. We have this 1-minute change in state. Let's see if we can move up and try to spot a larger change in state candle that could be an anchor. So there's that fair value gap delivery. Actually got a 15-minute fair value gap in here. So yeah, that's pretty nice in there. Go to the 5-minute. We actually have a change in state candle here. So if it hits this, we already have a pretty large, pretty important PD array that's tagged at regular trading hours high. Propulsion block high. It's giving us immediate feedback now. We have inverted 15-minute. So that'd be a reclaimed 15-minute fair value gap. And then we'd have a change in state here. So if it trades back down into that, if it's going to hold, we should not return back to the midpoint of this or get back down below the 15-minute fair value gap. And then that should set the stage for us to continue to try to race for the buy side. This is what has to happen if bullishness is going to be trusted again to target these equal highs up here. Otherwise, say this ends up down here. Well, all we need to do in that case is then wait for it to break this low, shoot a wick into that, because then that would be another bearish breaker. And then we could try to justify a move going down through some of the equal lows. And you could look at this as a potential sell model, or just simply target the low of this gap, right? So if this low stays intact in here, we got this wick. We do got relative equal lows there. So again, if that breaks down too deeply in this, it may be a problem. If this is going to go higher, think about it. We got sell side, buy side delivery. So if it trades down into this level and it can't even break through, and then we get displacement again, you're seeing the early formation of a balanced price range. If it's bullish, that's what should be happening. Once you hit a significant level that gives response, like this propulsion block, which is an order block as well. We're also above the daily order block. You notice that this high right here on this daily chart to the left is actually the low where this response is happening. So again, from the higher time frame levels that we see to now the lower time frame delivery, it just all dovetails together nicely. So again, if this gets a rejection here, say we get an order block that forms here, and then we can deliver through that order block, that is what I call a double change in state. And then of course we couple that with the higher time frame PD array that we're getting a response from. And we have other levels too, the 15-minute fair value gap, the failure to really break down if it does, give us an order block that gets traded through. Okay. So we'll see what happens in here. We're letting price come to us. It needs to do a run above this high here, failure to really even come back through this fair value gap on the 15-minute whatsoever. And then I'll consider trying to maybe target something like this up here. And then eventually these equal highs here can become a target. They're very, very close. So that's very nice right there. I like that. Because now we have our change in state now, right there. I'd like it to be a little bit more pronounced. I'd like to see displacement. And again, as long as this 15-minute fair value gap, price can stay above that, we should continue to be able to see this go higher, given the fact that this low has responded so aggressively. And that low is also, again, at the high of this daily bullish order block, which is another change in state. And again, if it does eventually short, say we get down to here, or for me, if we could just simply get beyond this inversion here, which is what it would turn into, and then we can see like a wick get shot up into that, that would make me think, okay, I'm ready to go short. For now, with what we see here, it seems like it's very much interested in trying to target these equal highs. This is the most salient target for me. It looks very obvious. And the DXY is having a hard time continuing to go to the buy side. It's giving a nice decline in here. So, we got to see if that's going to continue or not. Let's take a glance. We also have SMT at the lows here. That just further justifies what I just outlined without even looking at it. There was SMT, kind of supports the overall thesis, what I just laid out. The Dow's not, so there's a crack in correlation pretty heavily. The Dow looks like it's creating the market maker sell model scenario, really contesting that regular trading hours gap. So that might be a problem for buys, even though there's a SMT there. The SMT here, given the Nasdaq has the SMT with a higher low, while the other ones have lower lows, the Nasdaq's going to be the one that's the more slow mover if we do end up seeing this collapse. The other two are going to have larger, cleaner price delivery relative to this one, assuming that they all end up going lower. But I'd like to see displacement through this before I make that decision, because we have the SMT, because dollar is still looking bearish. Well, at least turning for a retracement bearish. So we still got this up candle here. That is the 5-minute bearish order block. Okay, so if we can't even get to the 50% of this, we have one change in state. If we were to get that second change in state, which is simply getting below this 15-minute, which is why I said all I need is this to be violated for me to then really get behind the rest of this gap being traded to. If we were to not get that to happen and it holds this, again, we should be able to see this get slid through pretty aggressively off the heels of the SMT. But of course, again, there's skewed information happening right now. The lack of correlation, the fact that we're ahead of FOMC, dollar doing one thing, the indices are doing the other. We do got the currencies kind of reluctant to go lower too. We'll see what happens with that. Got a gap in there. Yeah, we're not really doing anything too exciting, you guys. See, other than the short that I called earlier, that I hinted at, we haven't really had much. It's just very slow, lethargic, small candles. But for the most part, again, if we stay above this level here should be violated. We also have the order block too from the down movement here, up movement. Right there. Basically the same area is a bearish order block and a potential bullish order block. Of course, as you move up, you can get the bigger one too. So if price ends up getting up above here, if we get displacement through that, all we need is a wick from this 15-minute, and then us drop to the lower time frames, find our model in that, anchored in this 15-minute order block bullish, to be able to then take a trade up to the highs up here. Now, that could be something you could wait for. Maybe that sounds more logical to you. If that's the case, there's nothing wrong with waiting for that. We got a 15-minute fair value gap here though, so this is early signs that we're going to end up doing that. So I think we'll get that. Still respecting the levels that I said would justify continued potential buy-side delivery. So yeah, let's see if that can do something. See how it treats this right now. So you guys got any questions? Okay, no questions. So yeah, we're still pretty solidly up to this point, still respecting this 15-minute. So there's really nothing telling us that it's a bad assumption. You know, we are kind of stalling out in here. We are outside the macro too, so I mean, it could hang around until the macro kicks in. Okay, now we're getting a pretty solid turn here. So yeah, the sensitivity in respect to that level is now being contested. See what are the other three doing? Yeah, it looks like they're starting to give it up here. So yeah, my next potential idea to look for is going to be closer to the macro. Because yeah, in between, especially when it's doing this, I mean, it's not necessarily aiming too aggressively at either direction here. And again, we have our trip lines, right? If price was to get down below this, it could invert and then go lower, targeting the midpoint here. And then, of course, you know, displacement through this high could then send us up through the buy side. Assuming respect to this 15-minute for value gap. So yeah, it seems to be holding this order block here and then the down movement here. We're stuck in between this up movement and this down movement here. It's kind of just not too excited. Again, we do got that propulsion block here. You know, we do got this bullish order block on the daily as well. So again, it looks like it's still interested in trying to reach for the buy side. We're just going to have to wait and see closer to the macro. It's too sideways, unwilling to do anything at the moment. Okay, so we're still respecting the midpoint of this 15-minute. Got a little stop run there. Closures above that 50%. Still very, very lethargic. So again, it's a bit uneasy to try to engage in this because we're in the middle of this little range. It's not necessarily too overwhelming. It's just like lethargic. It's building sentiments, holding price. We've got this large wick in here. Like I said, if we're going to go higher, it should be able to leave a portion of this open. You know, we are basically closing above the bearish order block there. So yeah, we'll see what this turns into closer to the macro. Yeah, I'm keeping my eyes on this level here. This will be another change in state, a deeper change in state in that 15-minute. That right there will set in stone that we're probably going to target the equal highs, that we have a pretty high likelihood of getting up there if we do get that change in state. Looks like we're about to. This is a bullish breaker here. It's high, low, higher, high. Stop run, coupled with a 15-minute fair value gap. So we'll see if it wants to hold that. It's just very, very slow. Very, very slow, lethargic. They may wait. They may have exhausted what they wanted to do today in terms of excitement, at least until tomorrow. They may still look to bang around in here. They may leave the equal highs up there for tomorrow. You never know. They do that stuff a lot. So, especially ahead of FOMC, NFP, it's just something you got to keep yourself aware of. So yeah, very, very not willing to give us displacement. Had a lot of excitement, but now it's slowed way down, which is typical for a fast London. Then you couple fast London with FOMC next tomorrow. I mean, it's a recipe sometimes for disaster. So that's why we stay patient. Still haven't engaged. There's been like 2 ideas that I've thought about engaging, but like this sell-off I called earlier, that definitely was one that could have been engaged. It was in the macro. I think that's actually the only thing up to this point. Maybe this breaker here. But with how slow it's going, I mean, if this was happening in the macro, it's a little bit too early. And if DXY was very aggressively selling off, it'd be a little bit more convincing. But for now, I mean, who's to say that they're not just going to hold price in this area? Could very well be the case. So I am in no rush. You shouldn't be either. Because think about it. If you took a trade up to this point, more than likely, you'd have gotten stopped out, or you'd be feeling the heat because it's not too like convincing that it's going to do one thing or the other. Maybe that changes, right? Maybe we break this low, create that as a bearish breaker, and then it looks to get back down here again. Maybe that happens. But we got to break through this level first. The 15-minute fair value gap has more value than a 30-second potential breaker. So yeah. It's one of the more slow moments. Very, very fast start to the session, pre-market open. You got to be aware that when that happens, this type of thing can potentially happen during the AM session of New York. Because why? Why is that a reality? Well, when they just throw the market within the first hour or before the open, what do you think everyone's trying to do once the open comes out? They're trying to race to get in because they think they're missing something. So what does the algorithm do? It pumps the brakes aggressively at times. Like this is pretty aggressive pumping of the brakes. Based on what we saw, I mean, it was just straight to the moon. So you can imagine everybody's thinking, I missed something, let me get in. They're in their chasing price. So it's just best to hold off when you have these types of conditions, if it doesn't come right to you. And it has not came right to us. This one kind of did, the short I called earlier. Other than that, I mean, I guess you could have made an argument for this, but what goes against this setup, right? Like the simple run below this low, displacement up there. Time is not in alignment with price. What time? The macros. If time does not align and you see a random breaker happening in the chart, because time's not in alignment, that's what's going to make it fail. So, that's just kind of the way it is. That's why waiting, it's so important. And a lot of people can't wait. But if you don't, the market's going to force you to wait. It's going to force you to get out of drawdown. It's going to force upon a lot of things that you don't want to deal with. Right? It's just really not really doing much at the moment. We did get down below this 5-minute here at this blue line. That's a 5-minute bearish order block. It seems like we're respecting from the low portion to the high. 50% of that is having a hard time being traded through. So maybe that leads to this being taken. Yeah, the Nasdaq, I guess the Nasdaq and the S&P, they've been kind of slow after the open. Both of them haven't really done much. Again, there is S&T down there, so you got to be very cautious with this, especially with dollar declining. It's bullish S&T. You can watch how this wick right there is treated. And we've got this wick. If we can get a change in state of delivery off the heels of the respect of this wick, that is a very strong signature that will continue. And that will be a protected low. Quote unquote, protected. So yeah, now we're getting into the macro. So things may get a little spicy here. They might may finally turn the heat up. Tagging that's that propulsion block too. See what happens here with this. See if it could shoot a wick down into this. Unless they just rip from this level because they stopped everyone out already. 3 drives pattern. This high to that low, that's a breaker. Right there. High, low, higher, high. Change in state, second change in state. So we should be pretty solid to get up beyond those highs once. Yeah, so now we're above this. So yeah, that should be acting as support. Little building blocks of support and balanced price ranges. So yeah, this preferably doesn't get back down to this 270 or 070 level. It should just continue. It should really pick up from here. We're in the macro. So let's see if we can get this to have some type of reaction from this. Should leave these things available. It should not really have to trade through all of that unless it comes back down and it just stays consolidated, which is it does have a chance of happening. But all in all, right, if this was a normal day, got a stop run, 15 minutes still holding. Higher time frame propulsion block is still holding. Still got relative equal highs up here, and then we got that other layer. Huge wick, right, coming off of the down movement here. It's also the breaker, and then we got those equal highs up there too. So ideally, this would be something that sends price up through that. So that's what I'll be watching here. We got this high to that low. Midpoint is the line in the sand. Ideally, if it's going to be something worthwhile, it's not going to even attempt to get too deeply into that. Yeah, very high resistance delivery. It was low resistance before the open, and then the open came in, immediately high resistance. Unwilling to move, you know, pre-FOMC characteristics just manifested aggressively. So it's inviting you to blow your account. Are you going to let it? Or are you going to have patience, relax, and then just observe, use some of the data for tomorrow? You know, unless something shows up, right? Like this is reasonable in here. We already have a stop run, higher time frame levels. We have 2 of them. Pretty clear trend line liquidity. SMT at the lows. Now we got the equal highs up there. So we'll see what happens. They didn't really give us a Tuesday or Wednesday high phenomenon or low. They kind of just set it on Sunday and rapidly have ran up. Seems like they were in a hurry to go and purge sell side, or to purge buy side. So, you know, if we do eventually see, because of the overall sentiment being bearish on the overall higher time frame, if we do end up seeing this decline at some point, say we leave this, then all of this will have been just manipulation to really yank people in early, price in a short-term premium, and then look to really punish the sell side. But it's an issue because we're in consolidation. A very hard environment to trade in. And get a, you know, like day-to-day, like overall where price is going to go with a surety. We've been able to do it, but again, you know, sometimes it fogs the lens by doing something like this ahead of FOMC, NFP. And you just have to be able to determine, like, okay, well, it's unwilling to really move. Do I really want to push and put my money at risk? There's nothing to do here unless you're looking at this as a possibility. It is a possibility. Do I overwhelmingly trust that this is going to shoot up from here? I mean, it's not really given a convincing response here. You know, we do got the line in the sand right there, but it's not really too convincing overall. Hasn't really done much at all this whole session, except that one move, right, which was the short. And then maybe this is going to offer this delivery up there for 20 to 30 points. You know, we'll see. But yeah, if this can't deliver, or at least start to deliver the buy side, I mean, the first 2 macros haven't really done anything. So with that being the case, I will then call it a day. No real reason to push too aggressively if it doesn't offer it. And again, if this was to collapse and get below this 15-minute, you immediately switch your perspective to this. And then beyond that, you have the gap down here that may still get reached into, since, you know, price is having a hard time leaving this area. that may still very well be what they choose to look for, depending on how this reacts. So we got a stop run here. It's been doing a lot of this stop run, delivery, like stop run to continuation, stop run to continuation. So we'll see if that vibe, because this is high resistance, we'll see if that continues. And again, if the midpoint here is violated, you then have to pay attention to the sell side. And then once it violates this 15-minute, you now have a potential bearish breaker here. So yeah, that was pretty strong move down into that. So yeah, because of the denial there, we'll see what happens. I'm not interested in really anything, given the way that this is behaving. It's just not willing to do anything, So there's really no reason to force your will in the market when it's just refusing to do anything that's reasonable. Maybe this, just did this. It still didn't totally break through that level. So maybe it displaces again, changes state, and then does get up here. Whether it does or doesn't, I mean, I don't really care too much about this delivery. So we'll see. Right? Still hasn't totally invalidated the level, like I said. So keep your eyes on that. But we're going to bring this call to a close. There's really nothing in here that I personally would like to engage. But hopefully you guys got value from today. Talked about a lot of things. We did call one move over here. This move here, I wanted to watch and see if it was going to work out. Very skeptical potential idea, but it was there. It was a breaker, low, high, low, higher, high. But now it's digging way too deep into it. It's high resistance, clearly. And we may just still stay in this consolidation because of FOMC. Okay. So because that may be the case, because I don't like what this is doing, like I said, we'll call this a day. Again, hopefully you guys got value from today. Don't forget to like the video, subscribe to the channel if you do get value and appreciate what I do here. And we'll be live again here on YouTube on Sunday. Those of you in my private group, I will see you beautiful people bright and early tomorrow, as always. And every day after that, okay? So yeah, that being said, hopefully you guys have a good rest of your day. Let me know if you guys have any questions or need anything. I'm always open to answering DMs. And yeah, that being said, have a good rest of your day and a good rest of your week.